Well, Midcap Microscope today checks in on Taj GVK hotels and resorts, whose current market capitalization is roughly around 2,600 crore rupees. The hotel sector tailwinds, well, they are very, very strong. But why is the street hesitant to book its stay into this name? Well, if you look at the chart over the last 6 months or so, it's been a mixed bag. The stock peaked at a 52-week high of around 530 or thereabouts in March, and then it's pulled back close to around 20%. Now, Taj GVK Hotels and Resorts, well, it's a joint venture between the GVK Group and Indian Hotels. Remember, both the entities, they hold equity in the company. The Taj Group manages and operates the entity for a fee. But first, let's give you a quick background check. They operate close to 1,240 rooms across 6 premium properties. Hyderabad, well, that dominates with around 48% of the capacity. Chennai is at around 18% and Chandigarh is at around 12%. Their exposure to Mumbai is at around 22%, and that is why they have 49% holding in the joint venture company, which is Greenwoods Palaces and Resorts. Now, moving to the financials, its average room rates and occupancy, well, they have been climbing up over the last few years. From around 4,700 ballpark, it's gone to around 7,900. The occupancy as well has moved up to around 77%, which in turn has resulted in revenues doubling from around 230 crores to around 450 crores. And, their margins have been steady in that vicinity of around 31 to around 32%. Moving to the valuations front, well, larger peers like Indian Hotels, Chalet, both of them trade at premium multiples, while Sami and Taj GVK will trade at a discount to their larger peers. Taj GVK's EV per room is just at around 1.7 crore per room. Now, that's much lower than its peer set. But you'll be asking, why the discount? Let's give you a few points. Point number 1, limited capacity additions. Well, a larger peer with similar model has been aggressively adding capacity. While Taj GVK capacity, well, it's degrown because Taj Banjara Hyderabad, well, that was discontinued in FY24 because, the lease period ended out there. So that's why you're seeing Chalet has added hotel rooms at a faster clip. Now, the other point that hurts them is that Taj GVK is not a pan-India player, right? And then there's a promoter overhang because the promoter entity holds close to around 75% in the company. Indian Hotels itself holds nearly around 25.5%. The street is now awaiting clarity on what's their stand with this particular holding that they have. But then what supports the stock? Well, a 250-key Bengaluru hotel, that's all set to open in the 4th quarter of this fiscal, which means capacity moves up around 20%. They also have a clean balance sheet, debt-free, and they get around 22 crore rupees from the share of the JV that was reported in FY25. So that's the stock we are educating you about. Taj GVK, a steady hotel company, clean books, but still waiting for the street to roll out the red carpet. Before we wrap up though, take a note of the disclosure that's up for you on the screen. Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.